Hi friends, myself Subrata Mukherjee, and today I will discuss another problem on cash flow statement. So the following are the summarized balance sheets of Arpan Limited as on 31st March 2018 and 2019. Share capital 1 lakh and 1,25,000, reserve and surplus 40,000 and 49,000, long-term borrowings 50,000, 40,000, trade payables, sundry creditors 50,000, 40,000, and short-term provisions 15,000 and 18,500. On the asset side, we have tangible assets 1,25,000 and 1,40,000, non-current investment 10,000 and 5,000, inventories 30,000 and 28,000, trade receivables 40,000 and 42,000, cash and cash equivalent 50,000 and 57,500. The notes to accounts is given. So in share capital, you have only the equity share capital of 1 lakh and 1,25,000. Under reserve and surplus, you have capital reserve nil and 1,000, general reserve 25,000 and 30,000, profit and loss 15,000 and 18,000. Under short-term provisions, you have provision for taxation 5,000 and 6,000, and proposed dividend 10,000, 12,500. Land and building 50,000, 48,000, machinery 75,000 and 92,000. Under cash and cash equivalent, you have cash on hand 20,000 and 16,500, and cash at bank 30,000 and 41,000. Additional information: dividend of rupees 10,000 was paid during the year ended 31st March 2019. Machinery during the year purchased for rupees 12,500. Machinery of another company was purchased for a consideration of rupees 10,000 payable in equity shares. Income tax provided during the year rupees 5,500. Company sold some investment at a profit of rupees 1,000, which was credited to capital reserve. There was no sale of machinery during the year. Depreciation written off on land and building rupees 12,000. From the above particulars, prepare a cash flow statement for the year ended 31st March 2019 as per AS3. So this is the structure of the cash flow statement. In the books of Arpan Limited, cash flow statement for the year ended 31st March 2019. First, the cash flow from operating activities. Just under this line, I have written profit before changes in working capital. We have solved few problems on fund flow statement. So in fund flow statement, we calculate the fund from operation, and it is calculated as a balancing figure from the profit and loss account. I have told earlier that there is no difference in the working of the cash flow statement and while preparing the fund flow statement. The terminology in some places is changed. So in fund flow statement, we calculate the fund from operation, and in cash flow statement, we term the same figure as profit before changes in working capital. So there can be two approaches. So one, that the profit before changes in working capital, it can be calculated here itself under the cash flow from operating activities as shown in some books, but it is easier for the student to understand, and it is easier to calculate if we prepare a profit and loss account, and in profit and loss account we will get this figure, that is profit before changes in working capital, and we will adopt the second approach. The next activity is the cash flow from operating activity, and the third one is the cash flow from financing activities. And at the bottom we have written opening cash and cash equivalent and the closing cash and cash equivalent. I have to open all the ledgers as given in the balance sheet, and we will place all the opening and the closing balances. So here I have opened all the ledger and placed the opening and the closing balance. The first ledger is the equity share capital. By balance BD 1 lakh and to balance CD 1,25,000. Then capital reserve by balance BD nil and to balance CD is 1,000. The third one is the general reserve by balance BD 25,000 to balance CD 30,000. Profit and loss account by balance BD 15,000 and 2 balance CD is 18,000. Next is the long-term borrowing. By balance BD 50,000, 2 balance CD 40,000. Then provision for taxation. By balance BD 5,000 and 2 balance CD 6,000. Proposed dividend. By balance BD 10,000 and 2 balance CD 12,500. Then land and building. 2 balance BD 50,000 and 2 balance CD is 48,000. Next is machinery. 2 balance BD 75,000 and by balance CD 92,000. Then non-current investment. 2 balance BD 10,000 and by balance CD 5,000. So here all the balances apart from current asset and current liabilities I have placed in the different ledgers that I have opened as opening and the closing balances as BD balance and the CD balance. Now I will deal with all the balances of the current assets and current liabilities. Now let us discuss about what is the impact of changes in current asset and current liability. In fund flow statement, we prepare a statement showing changes in working capital. But in cash flow statement, we reduce or we add up with the balance of profit before changes in working capital. So the first item is the current liability under which we have sundry creditors. So there is a decrease in the amount of sundry creditor by rupees 10,000. So when there is a decrease in the balance of sundry creditor, it means there is an outflow of cash by rupees 10,000. So I have put a minus sign and means that this amount will be reduced from the profit before changes in working capital that we will calculate from profit and loss account. The next item is the inventory, which is an item of your current asset. So there is a decrease in the amount of inventory by rupees 2,000. When there is a decrease in the current asset, it means there is a inflow of cash. So we have to add it up with the profit before changes in working capital. The next item is the increase in trade receivables. That means their opening balance is less than the closing balance. So when there is an increase in trade receivable, it means there is an outflow of cash, and this amount of 2,000 will be reduced from profit before changes in working capital. So this way I have put all the balances which is given in the balance sheet, and now moving forward to the transactions which is given in additional information. The first item is dividend of rupees 10,000 was paid during the year ended 31st March 2019. So your journal entry is proposed dividend account debit to bank. In proposed dividend ledger, I have placed it on the debit side to bank 10,000 and the balancing figure is to be transferred from profit and loss account, that is 12,500. So in PL account, we will place this 12,500 on the debit side. So in profit and loss account, to proposed dividend 12,500. The next item is machinery during the year purchased for rupees 12,500. So before moving to the next item of additional information, the dividend paid of rupees 10,000, I have placed it under cash flow from financing activity in the cash flow statement. Dividend paid minus 10,000. The next item is regarding purchase of machinery for rupees 12,500. So in machinery account, I have placed machinery account debit to bank 12,500, and this amount will be placed in the cash flow statement under cash flow from investment activities. So in cash flow statement under cash flow from investment activities, machinery purchased minus 12,000. Since this is the outflow, so we have to keep it in within bracket. The third item is machinery of another company was purchased for a consideration of rupees 10,000 payable in equity share. So the journal entry is machinery account debit to equity share capital 10,000. So in machinery ledger, I have placed it on the debit side to equity capital 10,000, and again on equity capital I have to place it to give the double entry impact. So in equity share capital account, I have written buy machinery 10,000. The fourth item is income tax provided during the year rupees 5,500. So in provision for taxation account, by profit and loss account 5,500, and on the debit side the balancing figure represents the amount of income tax paid during the year, which is calculated at rupees 4,500. So the amount of 5,500 I will place it in the PL account, and the amount that has been paid to bank is 4,500. This amount will be shown in the cash flow statement under cash flow from operating activities. So in profit and loss account I have placed it to income tax 5,500, and income tax paid is shown under cash flow from operating activity as less income tax paid rupees 4,500. The next item of adjustment is company sold some investment at a profit of rupees 1,000, which was credited to capital reserve. So there is a balance in capital reserve of rupees 1,000. So that this is the profit that has been received from the sale of investment. So under non-current investment account I have placed it, the amount of profit has been transferred to capital reserve, that is investment account debit to capital reserve for 1,000, and the balancing figure represents the amount of that is the amount received on the sale of investment, that is for rupees 6,000. So the total of the debit side and the credit side is rupees 11,000. So the amount received from the sale of investment I will place it in the cash flow statement under cash flow from investment activity, and this amount of capital reserve 1,000 I have to place it in the capital reserve account. So in the capital reserve account I have placed by non-current investment rupees 1,000. So sale of investment of rupees 6,000 I have placed it under cash flow from investment activities in cash flow statement. Now there is a depreciation on land and building for rupees 2,000. It is given in the additional information, but there is no sale of machinery. So the balancing figure in machinery account represents the amount of depreciation, which is rupees 5,500, and this will be entered in the profit and loss account. And the balancing figure of land and building account represents rupees 2,000 is the amount of depreciation. So both this depreciation I will record in the profit and loss account. So in profit and loss account, to depreciation on land and building rupees 2,000 and on machinery rupees 5,500. So I have recorded all the transactions given in the additional information. Now this is the time to close the ledgers that we have opened. So the first ledger is the equity share capital. The balancing figure represents the amount of equity capital issued for rupees 15,000. So here the journal entry I have passed is bank account debit to equity share capital rupees 15,000. Issue of share capital I have recorded in cash flow from financing activities at rupees 15,000. The next ledger is the general reserve. The balancing figure represents the amount transferred from profit and loss account. So general entry here I have passed is profit and loss account debit to general reserve rupees 5,000. So in profit and loss account I have placed the amount of general reserve as to general reserve rupees 5,000. The next ledger that I have to close is the long term borrowing. So the balancing figure of rupees 10,000 represents the amount of long term borrowing that was redeemed. So long term borrowing account debit to bank. So this amount of 10,000 will be recorded in the cash flow statement under cash flow from financing activity as redemption of long term borrowings. So in cash flow from financing activities I have recorded redemption of long term borrowings for rupees 10,000. So I have completed closing all the ledgers that I have prepared. Now this is the last ledger that I have to close, that is the profit and loss account. And the balancing figure in the profit and loss account represents the profit before changes in working capital 33,500. So when you will be when you will solve a problem on fund flow statement, this figure represents the fund from operation, and when you are solving a problem on cash flow statement, or basically when you are preparing a cash flow statement, this figure, the same figure, is termed as profit before changes in working capital. So profit before changes in working capital, I have calculated from profit and loss account. The amount I have placed it here in the cash flow statement at 33,500. Now I have calculated the value of net cash flow from operating activity, which is calculated at rupees 19,000. Then the cash flow from investment activities is 6,500. Then the net cash flow from financing activities is 5,000. This is the outflow minus 5,000. So net increase in cash and cash equivalent is rupees 7,500. So 19,000 is the net cash flow from operating activity, minus 6,500 is the net cash flow from investment activity, and minus 5,000 is the cash flow from financing activity. So if you add up these three figures of cash flow from operating activity, cash flow from investment activity, and cash flow from financing activity, you will get 7,500, which is basically the net increase in cash and cash equivalent. If you add up with the opening cash and cash equivalent of 50,000, you will get the closing cash and cash equivalent. So I request all the students who are viewing my channel to subscribe the channel, and please record this problem in your notebook so that you can understand it properly. Thank you and have a good day.